Good morning, everyone, and welcome to the Quantum Leap Morning Leap for Thursday, February the 18th, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap. Quantum Leap is a private trade room. It is a subscription room. I'll put my contact information up in just a minute. Each morning we come together and take a look at the market, macro to micro, take a look at the structure of the market, where we want to do our trade levels and our targets and our main hypotheses for the day. Before we get going, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own trade metrics. As I mentioned, this is a subscription room. It is not a commercial venture. It's us live all day. We do these pre-market sessions, and then we do live analysis and trading, and I share my my thoughts and my trades with you. But there's no website, there's no blog, just me and a couple other people, Marvin, Howard, and all our other members. It is a self-organized learning environment, so we do encourage engagement and participation. Please send me an email at quantumleapfeatures@gmail.com, and I'll give you a free trial into the room, or give me a call, 647-545-8065. I love talking about the market. You rarely will find me unattended. And you will need a Skype account. It's easy to do. It's easy to open up. Send me a Skype request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, if you like this video, there is over 300 of them. We do one each morning, and I post it up on YouTube the following day. You can see what our track record is, what our hypothesis for each morning was, and how that played out. Do a search on YouTube at Quantum Leap Futures. And if you like what I do, please follow me at Twitter, at Crazy2 on Twitter. Okay, so yesterday we were looking for the possibility of a gap and go day. We thought we could get rotation. Our warning line for lower price discovery, was down here at the 1904, and then higher price discovery was 1909.75. We opened out of auction. We had an open test drive. We tested up into the 11, and then we tested back into that key level at 0375 is the CLVN. It got down to 04, and then the buyers stepped in and they just took us straight up 14.5 points up into that 18 area. We just chopped around there for most of the morning, and then in the afternoon they took us up into the 22. Remember that 19 was a key area for us above, and we sort of chopped around that 19, tested up into the 27.25, and then closed in around the 22, closed 22.75. So we ended up with a trend day, a gap and go. It's the first time in 2016, barring the holiday on Monday, that we've had 3 days of gains. And overnight they took us up. Remember, our month open is 29.75, and we went up and tested the. I posted it in the room last night. Was looking for a move up to test the month open. We did. We actually popped up to 33.50, where we had a beautiful classic FUBAR Mr. Sneaky tech gap, which I'll show you in just a minute. Since then, we've come back, and we seem to be finding some serious balance around the 27. Remember that we are now, we went back to the QLTP. This is a sheet that we derive off of mine and Howard's homework sheet. It's posted in the room by Howard each night, and on it has your news for the day, has a little work area, has the daily, weekly, and monthly Pearson pivots. It's got your key numbers, open, highs, lows, and then all the references that we're looking. This is PDC means previous day close, so ladder above the previous day close, ladder below the previous day close. Tells you how many numbers of days are in the composite, which is the combined volume at price going back to the start of the composite date at 1/1/13. And then it has all our key levels that we're looking at. And it's not a trading sheet, it's a guide sheet to tell you where there's confluence of different methodologies and different levels. And if there's any questions on this sheet, feel free to ask during the course of the day, and I can bring it up and just let you know. There's moving averages, there's pivots, there's naked crosses, there's naked VPOCs, there's CLVNs and CHVNs and daily LVNs, and everything we need as a guide. And I always recommend print it and then have it handy so you can keep it as a reference. Of course, most of everything. How do I get this off my sheet now? Most of everything. Oh, now I don't know how to get it off. There we go. Most of everything is going to be on my my homework sheet anyway. But let's start with what I usually like to do. Let's take a look at the news first, and we'll get into our morning routine. We had Philly Fed and unemployment claims. They came in pretty much as expected, and at 10 o'clock, we've got CB leading index. At 10:30, we've got natural gas, and then the big one, of course, will be crude. And Japan's got industries activity all day. But the big one will be crude today. But be careful at 10 o'clock for CB leading index. Market is starting to move back up. Got back up, testing the Keltner center line. So each morning, I like to start with a basic candlestick chart. I use a 9 EMA and a 20 SMA. That's always going to be my two moving averages. Those are the ones that I prefer on all my different time frames. Now, of course, we are sitting just below the month open. The month open is 1929.75. We're coming up there. So we are still in a bearish month right now, but we are coming up and testing that. Coming into next week, at the end of the week, we're going to have to start looking at critical mass. I'll talk about that concept next week, but really we're nowhere close to being anywhere close to critical mass right now because we're too close to the open. We had this beautiful long trend up in August and September. We challenged that trend. October, November, they took it back. December, we challenged it again. And then so far in 2016, we violated that trend, and we have a downward trend on the possibly starting on the monthly. On the weekly, get rid of the open interest here. On the weekly, we do have the downward trend. We've got slope and separation, but we are starting to have our first real challenge of the 9 EMA and trying to get back above it right now. So today's going to be a critical day, and whether or not we can continue this this upward rally and get back above the 9 on the weekly. But the overall trend right now is down on the weekly. On the daily, we can see that we've now violated this downward trend. We challenged it once and failed. Now we've challenged it again. We'll have to wait to see whether or not we can get the start of a upward rally on the daily. But as it stands, resistance is going to be up here at the 1940 level. We can get above the 1940 level, and I think we get some continuation. But I'm still worried. Right now, we are coming up into option expiration at the end of this week. Put-call ratios are pretty negative right now. And max pain, just so that you want to know, as it stands last night, max pain on the spider is right here at 193. So we'll look to see if this changes today, but right now we're pretty close to a pin at 193 to cause max pain for both the puts and the call positions. On the intraday, you can see that we've, last few days we've had this really strong upward trend, great slope, great separation. Got a little bit of a technical gap that hasn't been closed, but it looks like it's going to close it more by time than by price. But a close will probably be in around the 1920, 1918 level. But the trend is up on the 4 hour. On the 1 hour, same thing, but we're losing some slope or some separation. We still have slope, but we're losing separation. So key level to hold here is going to be 25 for the 1 hour. Going down to the 30-minute, more consolidation. We could created this technical gap. We are above the 9 and the 20, but we've lost slope and separation, and we're getting challenged on the 30-minute. On the good example of a 30-minute Mr. Sneaky Tech Gap. I wouldn't really call this a foobar, but it was a foobar on the both the 15-minute. So here it is on the 15-minute. You have clear direction up. You get a volume spike. You get a move up that creates the technical gap. Then you get an inside bar. That's the Mr. Sneaky. Your entry is on this bar right here. And your first target is the close of the gap with a possibility of continuation. Now it shows up, the trend itself is being challenged, but we do still have a upward trend. If we break below the 27.25, I would say the 27, we do have a naked cross right here down at 24, and I would expect that that would get taken out with a break below that 27. This is the one I took. I took this trade last night on the 5-minute. Actually, I'm sorry, I didn't take this one. I took this one. Where is it? Oh, right here. I took this one. This is as good as they get. And I posted it in the room as it was happening. And I know at least Marge took advantage of it. There's the volume spike. There's the foobar. This is a classic foobar because the selling wick is as large as the body. Then you have the Mr. Sneaky. Your entry was right here. I actually took 1929.25 and got short. And then it was 1 o'clock in the morning, so I ended up closing my trade out when we got down to 27. But actually, you could have rode that down. You actually could have rode this because if you got in at where I did at around 29, 29.25, 29.50, you never your entry was never challenged. You could have taken that trade all the way down, into the 17s, and that's a nice 20-point ride. When these set up, your target is the gap close against the first and the second EMA, but a lot of times, especially in gold, you will get a much bigger move to the downside. We did have a foobar Mr. Sneaky on the 15-minute right here. It didn't show up on the 5-minute, but you actually that was a shooting star as well. So you could have taken that pattern or taken the foobar Mr. Sneaky. It was a foobar Mr. Sneaky on the 15-minute and tech gap. All right, so let's take a look at the structure. You can see that we've had one. We've now had we've had 4 now. I don't count the holiday day right here. So 1, 2, 3, 4. We've got 2 gaps. We have to worry that this could be an exhaustion gap because it is our 3rd gap up. And I don't think we're going to get away from this 1890 too quickly. Everything's going to hinge today on whether or not we stay in balance, or break out and continue up. We are going to open up with a gap up again. So this is going to be our fourth gap. I would look for this gap to likely get closed. We haven't closed the other gaps. I think we're going to come back in. There's still a lot of undetermined fair value right now, below us, and I don't think we're going to get away from it. The 2-day microcomposite VPOC, which is also a naked VPOC, is at 31. Our value area that we're in, that value area that goes back to January the 7th through to yesterday, our value area high is 32. I'm going to be using 33, actually 33.50, because it's the Globex high as my key line in the sand. If we get above that, I'm looking for continuation up into 35 and a test of that 40, this range high up here. And I'm expecting failure up there, but you never know. Above the 41, you've got 47 and 52 as your two main targets, with 45.75 being a previous microcomposite VPOC. To the downside, there's not a lot of guidance right now for us to the downside until we get below the 21.75. There's an LVN that we're going to look at that's at 24, I believe, from overnight. But it's going to be hard to trade in this area. It's going to be choppy. So you just be careful today. If we get below 17, I think you got a clear move into 15. I think the midpoint is 16 from yesterday. I'll have to check that. 09.75 is going to be our key line in the sand for a move back down to 05 and possibly testing the lows, the 1900s again. So let's take a look at the overnight, start moving our numbers over. So our overnight high is at 33.50. That was our next big line in the sand. It's going to remain there as well. I'm just going to move this up, not the overnight high. Just going to move this up to 34 so you can see it, but it is really 33.50. We have the naked gap and the naked VPOC at 30.50 and 31. That goes all the way back to February the 2nd, or I should say February the 1st. Overnight inventory is rather neutral to net long right now. We had a pretty good Gaussian distribution for most of the night that centered around the overnight VPOC. The overnight VPOC is not likely to shift. If it shifts, it's only going to shift up by a couple ticks. So it's at 27, which is basically right at our value area high from yesterday. So that's why I was saying if we got below, if we can finally get below this 27, I would even say the 26, then we're likely to get the move down into the 24 and 22 area. So I'm going to use the value area high, but I'm going to wait until I'm clearly below the 26 level to take the short into the 22. And then there's not a lot below us. You've got the 26 and the 25, and then they've got a LVN here at 24 from overnight, but nothing I would say that would stop us from coming down to the 22.75. So once we get below the 26, I think you got a clear shot into the 22. There is a little LVN right here at 21. So I think you got to pay attention to that. So we're going to put that in as a trade level. And then below that, your target would be back to that 19. And then the big one is going to be this this I'm going to use the midpoint up to the value area low. I want to, if we get below the midpoint at the 1550, there's not much down here. So I'd be looking for a move down to the 1350 as my first target. The overnight low is, I'm sorry, I've got to put the overnight low in. I forgot to put that in. Is at 1675. And then I don't need this right now, so let's just take that off. Got the LV in there. You've got the 15s, and then you've got the 975 is going to be our warning line. And our key line in the sand is going to shift up to that 0375. And then below that, I'm looking for a dip into, well, the first target will be the 1900s. But I'm not using the 1900 as a trade level. I think the real level below us is 97.75. We've sliced through this 1900 too many times. And then all our levels remain the same. Below 97.75, the next big target's down here at the 89.50 and 88. I don't think we're going to get much more out of that. That's what's our 20-day? Our 20-day right now is running 44.24, so off of the 1933.50, 44.24. Our daily ATR target to the downside is 89.25. So we do have room to get down here. So there is room to get down there. And then I should do this then so that we have it. 87.75, just below it. And then below that, you've got the target at 86.75. Actually, I'm going to use 85. 81.75, and then the big one below there is going to be that 78.75, which is now shifted to 79, and then 77.75. All right, so those are some downside numbers. Okay, to the upside, we're going to be testing the range high, the main target above, gang. If we hold above the the value area high and get above range, even if we dip in to take out the naked close and the VPOC, and possibly even take out the overnight low and bounce off of that value area low. If we break out the main target above, and I would expect this to get hit at some point in time today. So what I'm watching for is on the open, do we reject the range and the value area high and get initiative buyers to take us in to take out the 30.50 and 31.75 and push through to the overnight high? Or do we get responsive sellers pushing us down first into closing the gap and possibly doing a trip through value and then bouncing from here and moving up? So my main hypothesis is really going to center around how they handle this this value area high and where do we bounce from, or do we make the move to the upside first and then fail somewhere up here in the 33 possibly even 40 and come down. So, key level for us today is going to be, this 26.25. We want to be long above it. We want to be short below it. At least short until we get down here or a significant bounce. Levels to the top side, the key line in the sand above is still the 33.50. I'm showing it at 34 simply so we can see the overnight high. Anything above that, I'd be looking for a move up into the 35 and a quarter. The 40 is our weekly ATR target. Our weekly ATR is 75 and 275 off of the weekly low, 1865, our weekly ATR. So we're getting close to our weekly ATR, and it is Thursday. Our daily upside ATR target off the low of the night is going to be up at 1960. Here we are again, where our daily ATR target coming into the end of the week is higher than the weekly. Wow, that gives us a lot of move. 1860.75. So we got lots of range potential right now from 1960s down into the 89. That's amazing. All right, let me put the numbers in between there. So we've got 40, 41 we have to be careful of. I know it's just above here, but I'm going to emphasize it. That's key CLVN. 47 and a quarter. Well, there was that previous microcomposite rate at 44.75. That will be the target. 47 and a quarter. And then we've got a little bit of resistance at 49.50, 52.50. And 62, nothing above there, 62.50, 67.75, 70.50, and then 72. Anything above 72, I think we go up to the 85 level. Okay, so here we are, right at the range high. So going to be an interesting open. Watch how they handle this 26 area. If they really dip into it, especially if we open up with a tick gap to the upside and we've got a gap close to the downside on the tick, I'd get short into the 22. If they reject this right away and you see initiative, movement up, take it into the 31 area. We are below the Keltner. Keltner center line is at 29 and a quarter. A move down to the Keltner lower line will take us down to the developing value area low of the overnight session and the lower Keltner line at 23.50. Above the 29 line, a move to the upper developing value area high on the 24-hour. It's going to take us up into that 31. And a move to the upper Keltner line is going to take out our overnight high and test our key line in the sand up here. Quick look at gold. Gold, as I anticipated, continues to work its way down and chop around in the composite VPOC. This is the most traded price going all the way back to 2008, October 24th, 2008. We're not going to get away from it quick. Current balance is here. We got double distribution right now. Current balance is 1210. We're trading below that right now. I would expect at some point in time today we'll come back down to the 1201 area, maybe even test the value area low and back down to this 1193. It's not a good spot right now to trade gold because we're so close to this magnet. We're going to get a lot of chop in this area. First key line above us is going to be all the way up here at 22. If we get above 22, I'd be looking for them to test the value area, make a trip up through the value area up into the 37. And if we can get back outside of value, I'd be looking at yeah, not much room. It's right at value at 38 and a quarter. Yeah, not much. But right now, this time of month and where we are, I'm not expecting much from gold, just chop. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.